April was still a pretty good month for risk markets, though in terms of the equity market, not as strong as we saw in March. On a hedged basis, global equities rose by about 0.8% versus 5.3% in the month of March. Basically, the earnings season in the US hasn't been super fantastic, and we're not getting a lot more stimulus from central banks, so markets took a bit of a breather. But the big story was a big bounce in commodity markets. The commodity benchmark up 6.6% in the month. Across the board gains really. Oil did well, gold did well, and even agricultural prices did well. Signs of stability in the Chinese economy helping, and some supply tightness in a lot of markets as well. And as would be expected, the Australian equity market, against that strength of the commodities area, also did well, up 3.4% in the month. Although we've had two reasonably good months for risk markets, basically equity markets have rallied since around mid-February, I still remain pretty cautious on the outlook for a number of reasons. Firstly, valuations in a lot of equity markets are now getting to quite high levels, back to the highs we saw earlier last year. The earnings outlook is still quite mixed. The recent US earnings season, still a lot of pretty sober reports coming out. And central banks are really reaching their limits in terms of the stimulus that they can provide, and we're seeing signs of, in Europe and Japan, central banks cutting back on the sort of promises they're making to markets. And the Fed is still looking to tighten. So yeah, overall I think the market's going to be a lot more cautious in the months ahead. Look, if you share my view that markets are probably going to face some challenging times ahead, then some of the BetaShares funds that we have that you may find of interest are as follows. Firstly, we have what's called the Bear and Strong Bear funds that cover the Australian and US markets. Now, these are designed to go up in value when markets go down, so taking a position in those can effectively help you hedge some of your portfolio in the face of market weakness. Other products are defensive yield plays, I like to call them. The Dividend Harvester Fund and also the Yield Maximiser Fund give you some exposure to high yielding companies and some downside protection should markets peel back. And we also have a similar type fund in the United States, the code being UMAX. Hi, this is David Bassanese, Chief Economist at BetaShares. This has been my global market outlook for May. To get the full report, please go to our website, and I hope to see you again next month.